Hey guys, welcome back to another episode. In this video we will be going through our double Bollinger Band trading strategy in depth and how we use it in combination with price action. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. What is a double Bollinger Band strategy? The double Bollinger Band strategy makes use of two Bollinger Bands in order to filter entries and exits in the market. The strategy aims to enter long or short trades when price breaks above or below 0.5 deviation. The strategy can be applied to ranging markets as a breakout strategy or when assessing the momentum or slowdown of an existing trend. Now, add the following indicators to the chart. First, Bollinger Band 20 with 0.5 standard deviation. Select the default 20 SMA, but this time use the setting with 0.5 standard deviation. Second, Bollinger Band 20 with 3 standard deviation. Or you can download this system in the description below. The double Bollinger Band strategy incorporates 3 different zones. First, double Bollinger Band or DBB buy zone. The DBB buy zone is found above the upper 0.5 standard deviation. Presence of buy signal. Second, DBB neutral zone or 20 SMA zone. This is the center area between the upper and lower 0.5 standard deviation. Price trading in this area could be indicative of a choppy market that lacks a directional bias. Trend traders are to avoid taking new positions in this zone. Signals a slowdown in momentum or the beginning of a ranging market. Third, DBB sell zone. This zone is found below the 20 SMA zone. Presence of sell signal. Now, how to trade the market with double Bollinger Bands. The two main strategies to employ using double Bollinger Bands involve breakouts and trend trading. First, double Bollinger Band breakout strategy. The double Bollinger Band strategy can be applied when trading breakouts of an existing trading range by observing a break above or below the range, combined with a strong break into the DBB buy zone or DBB sell zone. Witnessing strong breaks provide a greater bias in favor of the breakout as traders look to avoid a false breakout. Here is an example of a double Bollinger Band breakout scenario. Traders should be looking for price to break out of the range and into the DBB buy zone with strong momentum. This large blue candle provides the necessary confirmation of a breakout and presence of strong buy signal. To mitigate risk, traders can place stops below the 20 SMA zone. Here are some examples of double Bollinger Band breakout trading strategy. Second, Double Bollinger Band Trend Trading Strategy. The Double Bollinger Band Trend Trading Strategy allows traders to assess the momentum of an existing trend. It allows traders to exit on a slowdown or add to existing positions when momentum and volatility increase. In this case, as long as price remains between the sell zone and the 20 SMA zone, traders can maintain the short bias. The exit point can either be on a close above the 20 SMA zone or depending on the level of risk tolerance. Those using the midline as a stop can manually move their stops along the 20 SMA zone as price downwards. Here are some examples of Double Bollinger Band Trend Trading Strategy. Advantages and limitations of a Double Bollinger Band strategy. There is no such thing as a strategy that works all of the time. Bearing this in mind, traders should be aware of the advantages and limitations of the Double Bollinger Band strategy. As always, if you learned something new, make sure you subscribe, click the notification icon and leave us a like to show your support. See you next time.